West Texas Intermediate crude oil prices have been hovering around $100 a barrel for some time, but Barron thinks you'll see $75 soon. Senior contributor to TheStreet, Dan Dicker, is here to rebut that claim. Dan, glad to have you.
Hi, Joe.
So what do you think, $75 oil?
No, I don't think so. But, Barron's uses 2 points, or they make 2 points, which I agree with, which anyone would agree with, but they come to the wrong conclusion. And the points that they make are, A, that we're having a glut right now, or an enormous increase in production of oil here in North America from shale plays in the Bakken, in the Eagle Ford, in the Permian, from oil sands in Canada, and from the Gulf of Mexico, which is true. And they also see a movement from oil, or replacement of oil, with natural gas and renewables, which is also undeniably true and inevitable. But the problem is that they come up to the conclusion that therefore oil will drop. And part of the issue I have with this, or the major issue I have with this, is that they forget that it has been a rising price for crude oil. It has been $100 crude oil that has inspired the technology that allows you to get oil from shale and allows you to go 5 miles deep into the Gulf of Mexico to get these what we call unconventional sources of crude. And these unconventional sources of crude are becoming more and more important as the traditional sources of crude that we've relied upon for so long during the 50s and 60s and 70s run out. And it's just simple math that you cannot get an oil company to spend $65 or $70 a barrel getting oil out of the Gulf of Mexico if that's all they're going to get at the pumps.
Now, another interesting thing in your article that you wrote on realmoney.com was that the article isn't looking totally globally, United States and Western Europe, but you mentioned Middle East, Africa, India, China.
Right, and if you look at some of the projections from some of the oil companies, forgetting about the IEA, because the oil companies generally have it right, and you look at the BP estimates and the Exxon estimates, the growth that's going to come in oil demand is not coming from the United States, it's not coming from Europe, and it even finds its parabolic end in those places we always talk about, like China and India. Where the real marginal growth is going to come from in the next decade is from the Middle East and from Africa, places where, in fact, demand is practically nothing right now, where it can do nothing except go up. Now, we've had oil demand go up by 10 million barrels a day every decade since the 60s. I see no reason for that to stop. In fact, I see a lot of reasons it could accelerate.
All right, Dan, as always, we appreciate your take on these things.
Thanks.
You can find more analysis from Dan Dicker on realmoney.com. For TheStreet in New York, I'm Joe Deaux.